you're short on intellect of how things work in financial markets, and you want to make as much money as possible, quickly, right? So they do paid advertising, long-form content, pay the media company 100 grand, and they make it look like an objective interview. Oh, check out this new stock. We're going to interview the CEO. And you get sucked into doing it. Think of all the ridiculous companies in the last 3 years, but they were public companies. They've never made money. And they're trading on 10, 20, $40 billion market cap, right? And they're now zero. Retail traders bought those stocks. Absolute morons, right? That is chaotic trading, yeah? What else? Getting confused between trading and investing. Look at those charts I showed you earlier, right? Our job is to make money in those little areas, okay? 20 to 60-day time horizon. Make big money in the 20 to 60-day time horizon, okay? Retail traders think trading is investing. No, it's not. So they go into something thinking, oh yeah, this is a good stock, good company, I'm going to buy it. And they don't even know what their time horizon is they're going in. So let's say they do. Let's say they go, I think I'm going to buy this stock for earnings. And they get it wrong. And it goes against them by 10%. What are they doing next? Well, it's a good company, so I'm just going to hold it. It'll come back at some point. 1 year later, it's down another 30, 40%. Well, it's a good company. It'll come back at some point. I'll buy some more and stick it in my pension. Then it goes down another 50%. Yeah, it's not such a good company, but I can't sell it now, so I'll just keep it in my pension. Maybe it'll come back one day. Right, that's chaotic process, okay? We don't do that. Professional traders do not engage in these activities. Obviously not. So just think of how ridiculous it is to think to yourself, what I'm doing now in any of those scenarios I just outlined, what I'm doing now, surely this is what professional traders do. No, we don't. We run away from any of that behavior, okay? So consistent input, consistent output, process, yeah? You got to have a process for generating high quality trade ideas on repeat, rooted in fundamentals with technical analysis and price action in the minority, okay? That's just for timing, okay? Trade structures, like the structures you've seen today, we replace just owning stock and shorting stock with trade structures that give us massive ROI and allow us to be agnostic. So we can sit back and just relax. We have these ratio trades where we say, okay, if it moves now, I make money. If it moves later, I make money. If it goes against me and I get it completely wrong, I lose a small amount of money. That's how you want to be sitting in every position, completely relaxed, knowing what you're going to do from the outset. Okay, you know all the outcomes of every trade at every price it's going to trade at every moment. So if you know that, how can you ever panic if you know it up front? You literally can't. You will never panic if you know what you're doing. We were having these conversations today at lunch and last night at dinner about what people were doing during COVID. And you can see in like March, April 2020, the panic and the craziness going on in financial markets. We were all sitting there calm as Hindu cows, just taking money out of the market, layup trades, okay? If you know from the outset, you never need to panic, okay? So the structures that you've seen, actually, there's an overlap between the trade structures and risk management. The structures that you've seen so far today, that is really part of preventative risk management, okay? Another part of that is diversification. So not having one or two positions and doing YOLO trades. You're putting less than 10% of your money in a position. When we're doing mentoring programs, we start guys off with a net spend of 6-7% in each position. So they're totally relaxed. They know that if something goes wrong, they can't lose more than 7% in their portfolio. But if they win, they're making 20, 30, 40 on a position, right? Reactive risk management, okay? That can't be taught in a video series. It can only be taught in a mentoring program. So when something moves and you have a position, whether it's against you or in your favor, how you're going to deal with the position, what's your next action that you're going to take, how to limit losses, and then this overlaps into the next one, which is managing your business properly, okay? You've got to go for certain statistics which make you an efficient, really good, God-like trader, okay? And you've got to manage the business to make sure you get those stats, right? So we're targeting 50 to 100% return, usually on 20-25% underlying volatility. Leveraging up with options, which means we're going to land somewhere in that 50 to 100% gate. Of course, we can make more, because if we get a Credit Suisse or a Carvana, we get the godlike numbers, okay? Win-loss rate 60-40, if you can, 65-35. R-score, which is the ratio of the dollars that you make on your winners divided by the dollars that you lose on your losers, minimum 1.5. You obviously want to be making more money on your winners than you lose on your losers consistently, okay? That makes you efficient, yeah? Sharp ratio, minimum of 3 if we're trading options. Average days in a trade, we're looking at the 20 to 60-day time horizon, but 20 to 25 days as an average. Why? Because we're going to have lots of credits that are 1 month out, and there's 20, 21 days in a trading month. So if we get a credit quickly, it brings down the average, right? So 20 to 25 days is about the right number. We're going to look at some examples of real guys in ITPM now, okay? So this is Gunter. You might have seen this guy. I mentored him last year. He was on the Thailand program. Gunter got very good returns over his mentoring program. So he put, I think it was starting equity, 100 grand. Over his mentoring program, he booked 280 grand of winners, 200 grand of losers, 80 grand profit, net 76. He didn't use all of his money, all of the 100 grand. So 60-40 win-loss rate, bang on there, because he's booking 54 winners, 36 losers, 90 trades.